Hello and welcome to Markets Today with your market strategist, Gaurav Kashyap. We saw risk appetite take a big hit overnight as tensions between North Korea and the US began to heat up once again. In publicized comments, President Trump said North Korea would face, quote, the fire and fury after the rogue communist states said that they were, quote, carefully examining plans for a missile strike on the US Pacific territory of Guam. The language heightened fears of war and spooked markets who adopted a risk-off mood through the US session yesterday. It was perhaps the most aggressive stance adopted by either side and follows a summer filled with missile tests from North Korea. Typically, when geopolitical tensions are involved, markets reduce long positions and adopt more conservative strategies, which sees increased flows into safe haven assets such as government bonds and low-yielding currencies such as the US dollar, Swiss franc, and Japanese yen. Following the overnight developments, the dollar index popped up towards 94 levels and now finds itself consolidating above 93.50 levels currently. The Japanese yen also continued gaining and snapped through a key weekly resistance against the US dollar at 109.80 levels. Perhaps the biggest gainer was the Swiss franc, up around 1.08% against the US dollar and up around 1.12% against the euro at the time of this recording. Gold also rallied hard, hitting highs at $12.69 after touching lows of $12.51 in trading during the early parts of the US session yesterday. Expect these asset classes to maintain their gains and keep an eye out for more rhetoric from Trump and North Korea in the latter part of the US session this evening. Looking at the economic calendar, the only major release on the day will be the EIA weekly crude inventories, which are due out at 14:30 GMT. The data is expected to show crude inventories dropped more than 2.7 million barrels. A reading greater than this, and we expect a proper test of the channel between 49.70 and 50 levels given yesterday. And finally, the euro and the pound both traded lower against the US dollar through yesterday's closing. The euro USD cross looks primed to test the next major support level of 11670 as early as Monday or Tuesday of next week, and the British pound sell-off saw the GBP USD cross achieve our target at 1.2960 levels given yesterday, and this will be the next support level through today's session for the GBP USD. The Aussie tested our support level of 0.7890 levels given yesterday and has continued weakening through trading today following weaker than expected inflation data from China and those exacerbated comments by the rogue North Korean state. The Aussie will be particularly susceptible to deteriorating risk sentiment due to the fact that it's a currency with a higher interest rate, and these tend to struggle when geopolitical tensions increase. We expect markets to maintain their current movement, and with the North Korea story moving back in the picture, we'll wait to see how developments pan out through the US session in the lead up to Friday's US inflation report. Guys, thanks for joining me today. And as always, if you have any questions about what we discussed today, you can drop me a line directly on Twitter at EGM Futures, and I'd be more than happy to address those for you. And if you haven't already, definitely visit the newsroom at the Equity website for more in-depth market analysis and market news. Have a great day of trading, guys.